Jean, if you want to start us off a little bit with, your name, your business, what you do a little bit.
So my name is Jean A. Casey, and I provide remote accounting services to small to mid-sized business owners, all industries, including the cannabis industry.
Okay. And Jim?
Yes, I'm Jim. I own and run Southwest Tax Specialist. I'm an enrolled agent, and I focus strictly on tax regulations, tax codes, doing people's taxes.
Amazing. And how did you guys get started with your industry?
So the story for me is I worked a normal job in accounting, and I went to school for accounting, but I had a few people that were like, I was trying to get a loan, and they asked me about P&Ls and balance sheet and financials, and I have no idea about that. And I was like, oh, that's easy. And then they were like, what do you mean that's easy? And then I said, that's your profit and loss, and then that's your balance sheet. And they said, oh, can you get that for me? And I said, yeah. I asked them to provide me the information, and I provided the information that they needed to get a loan, and they were approved. And so they wanted to pay me, and I was like, don't pay me. That's what I do. I go to school for this. And they were like, you should help other people. And I was like, no, this is just what I go to school for. I didn't think about being an entrepreneur, but it evolved into that.
And Jim, I know you got a story too.
Yeah, I was a paramedic firefighter for 20 years back in Ohio, and then I went to Wyoming and became the director of emergency services for another 5 years. And then I decided, that's enough. It's a young man's game, and I'm way too old for it, so I retired. And my wife and I moved back here to Phoenix area where the other boys were living. And after a couple of months, my wife said, you need to find a job. Yeah, I'm retired. You need to get out of this house 3 or 4 days a week, or else we're going to have problems. So I went, and I was driving around trying to think, well, how can I keep my wife happy? And I see this sign on a bus stop. It says H&R Block. So what the heck? They said they'll train me, so I went there and got trained and worked with them for a couple of years and found out I really didn't like the way they were doing things, and I didn't like other people telling me how to do it. So I went on and become an enrolled agent with the Department of Treasury and opened my own business.
Amazing. So I think today we have a kind of a unique opportunity, right? That we have an enrolled tax agent and also a CPA. Is that the
CFO?
CFO.
Yes.
So you help. So what would be the difference? Accounting, right? That's
so
help us out.
So what I try to tell people is that a CPA and a CFO in the accounting profession is like a husband and wife team. Mm-hmm. And the husband and wife team is that the CPAs, they are strictly tax planning and being more tax strategically for businesses, and they help out nonprofits, publicly traded companies, corporations, companies that are over 50 employees. And then if we know, like the wife, if you're married, then you understand that wives, they carry lots of hats, and they start off and they're the nurturers of people. And so when they're nurturing a CFO, we're here to nurture the small business owners, and we kind of get them set up for entity structure set up, their accounting, their bookkeeping, their payroll, all the way up until taxes. And we also help them with tax planning as well. And it's the hand-holding that most CPAs don't have time for, but there are CPAs that do it, but it's more so they're like the higher echelon of the accounting professionals. And so we're just kind of like a tag team of the accounting professionals. So I am just like there to assist small business owners.
I guess I want to go into a little bit about what are some like common mistakes that you guys see for people that are starting out, just registered their LLC or whatever company structure they went with, and what are some mistakes that you guys see that people should avoid?
Well, I think one of the things is that they think they don't have that much income coming in. So what do I need with a business account? Mm-hmm. Now, the IRS looks at it strictly as if you have a business, you have a business account. you separate your business money from your other money, or else it's commingled, and they will immediately reject any tax return if you commingle your business and your personal money, because you've lost track of it. So that's, I think, one of the biggest mistakes. They think just because they're not making thousands of dollars, they don't need to do that. But that's wrong. The IRS wants it immediately.
So is that when someone has a job, they have their like 9 to 5 or part-time job or anything, and then they start a side business, right? Like something small that they claim to be. Yeah. and when it comes to tax season, they file their W-2, right? And then is it that they just add on to it? They think that they can just add on to it, which I know you can't do that, right? Like, how do you guys catch these? Like, you need a business account. Like, how does that process go?
So anytime a person decides that they want to take their side business, their side hustle to be reported income, they create their entity structure. And that's the number one part of starting a business. When you have an entity structure set up, whether you're LLC, sole proprietor, or S Corp, or LLP, when you say, this is what I'm going to do, you then have to open up a business account. So the money from that side hustle, that business, what you're doing is going into that account. And you're not paying. I had a client, he was paying his child's daycare, and then he was going to the liquor store. And I was like, sir, I can't do you got to get a separate account. He was like, well, it's all my money. I'm a sole proprietor. And I said, I understand you're a sole proprietor, but you're getting government contracts, and the money that comes in from that government wages has to be separate. Even though that money is going to pass through to your tax return, you still have to have separate and pay for your rent, pay for your child's daycare, pay for your food or anything like that. That's the biggest thing, that you cannot commingle those monies, even though it's yours.
Right. It's a matter of tracking. If you don't have a solid base, all my income from this business went into this account. If you can't show that, then how do you actually show how much income you have? Mm-hmm. And that's where the IRS steps in and say, wait a minute, no, we will not accept it. Mm-hmm. And when they reject that, then they can go back as many years as they want and
audit.
Claim it as a hobby, not a business. Mm-hmm. Therefore, all your business expenses are no longer valid, and you need to pay that money back. Mm-hmm. I've seen as much as $60,000, $70,000 demanded to be paid back because they declared it a hobby because of all commingled money. Mm-hmm. And they couldn't argue it. How are you going to argue it? You've got no tracking.
No way.
Okay.
And then that segues into why, even if you're just starting out, most small business owners feel, I can't afford a bookkeeper, I can't afford an accountant, and they definitely can't afford CPA prices. And so that's why it's very important to have an accounting professional, because you're having these items come in and out, and you want to know the difference between each expenses and which ones is separate, that's personal. And it's the bookkeeping aspect of your accounting process, so the taxes can be done properly.
Most people are going to be very interested in the ways of how we can save money, right? And I know you guys do a big part in helping business owners pay less taxes. Mm-hmm. And obviously legally, right? And because the rules are written, like it's a fair game. We all know what the rules are, but for the average person, when I'm not going to read through everything like you guys do and figure out what's deductible and what's not deductible. So do you guys want to a little bit touch on that kind of aspect of like maybe
what I hear a lot of people say is the tax structure and the tax regulations are written for the rich. No, there's only one set of rules, regulations, and codes. The difference is the person that has a little bit of money hires somebody who knows those codes and knows how to apply them to get them the best tax return. The problem that many people have is that they, of course, don't know. They know their business, but they don't know taxes. They don't know rules and regulations, but they don't want to spend a little money to have somebody else do it, so they do it themselves. And they miss so many deductions that they were totally entitled to have, but didn't know anything about, so they didn't.
Yeah. On average, I would say they miss about $12,000. And that's because, like he said, they don't want to hire someone to look over that. They're used to handling all the hats. For a small business owner, that's understandable. However, when it comes down to savings and understanding the tax codes, it's a matter of what your books were set up for, because it's an expense to you, but it actually may be an asset that can be depreciated, or it could be something that can be a prepaid expense, but you just doing the normal stuff, you're just like, hey, I paid this was an expense. And then there's things that can lower your tax liability that you're doing in your home, your car, your vehicle, or other things that you're taking care of, or things that you may not have known that you can do that can lower your tax liability so that you don't pay as much on taxes. But we cannot help you after 12/31. It's only a small write-off or a window of things that we can help a small business owner with. When they come to us in January and say, okay, these are my books, what can you do? We need you to do something before 12/31, and that's another barrier that we have to deal with, is that they come to us too late and then expect grandeur outcomes.
I wanna hear a story where you guys were able to help somebody out, because I know people come to you with, oh my God, I just got a letter. It's usually when you get the phone call, it's scary stuff. So I want to hear a story or something where you guys were able to help them out.
Well, a lot of times, especially just after the end of tax season, people start getting these letters, and people need to understand, you will get a letter. You will not get a phone call. You will not get threatened that the sheriff is going to come and slap you in cuffs if you don't send us some money. That is not the IRS. They send you a letter and they give you 90 days to answer that letter, okay, in most cases. And there's no reason to get nervous or upset, provided you did your bookkeeping during the year. Then you can go in, look at the tax return, and figure out, what is the IRS looking at? What are they concerned about? And then answer the questions. And I would say this past year, they've sent out probably more mail audits. In other words, they're computer-generated letters, and they're the first level of an audit. And I've had so many where it's really been just a matter of answering a simple question. The IRS isn't trying to trap you into something. It's just threw up a red flag. They sent you a letter, answer the question. Now, if you can't answer the question, that is when the second letter comes, and that's when it starts getting a little more difficult, when you can't answer the question. But right now I'm working on a lady that's in an unfortunate situation. She was not allowed to know anything about the taxes that were being prepared. And her husband had a gambling problem. He had a job. He had investments. He was making big money. But way back in 2006, 2007, he had a tax due of a substantial amount of money, and that made him mad, and he just quit filing taxes. Now, he passed away in 2023, and she opens up this business filing cabinet, and oh my God, there's got to be 50 different letters from the IRS. What do I do? And that was her first question to me. What do I do? Well, first we contact the IRS, we explain the situation, and we get them to freeze all these liens, and Then we start the work, and you start doing the tax returns. You got to get them current. You can only go back 3 years. So you got to get the last 3 years current, and then the IRS will talk to you. If you're not current on your tax returns, the IRS is not going to talk to you.
So there's no room for negotiation until,
nope.
Yeah, okay.
Nope, they don't want to have nothing to do. If you're not going to file your taxes, we're not going to talk to you and give you a benefit. And right now we've got it frozen, and I just got a stack of mail. I bet you there's got to be 40 different envelopes from all these different years from the IRS saying, this is what we think you owe, and this is what you paid, which was actually zero, and this is what you now owe.
Yeah.
And it's up to $100 and some thousand
yeah.
with interest. And so we're going to try to put together a offer and compromise showing the IRS that, look, it really wasn't her fault. She was shut out. He forged her signature on these joint returns, and I can prove all of that, but it's just going to take time. IRS just has to realize that we are going forward, and there is a valid reason, and we're going to go forward, and we're going to solve this problem. When they get that understanding, they work with you. Hopefully they'll work with this one.
You have any
So for
stories?
me, and mine's going to be on the accounting side of things. So I had a client, and she's still my client. She's a doctor, and she had no idea about her accounting. She said, accounting just gave her hives. And I was like, okay. And I'm like, this is what I do. So it's like, for it to be such a stressor for her, she kind of neglected it, and we found out her entity structure was not set up properly, and she was set up as a S corp, but she was only making $20,000, and so it was like her last accountant took care of everything, and she just didn't know. But I was able to kind of tell her, hey, we can't, you're a doctor, you're gonna make money, but if we take and dispute the S corp taxation, then you can't become an S corp for 5 years. So we need to keep it there, and we're just going to build up on what we have. And we got her accounting all set up and situated, and she's growing her business in regards to having less stress for her. She now is taking that time and building on her practice and bringing in more money. And she's now in a position where she can purchase the building that she's in because of the increase in growth that she's had. And she's now well over 100K in revenue. And so she's doing very well. But it was just the stress and the peace of mind she didn't have with her accounting. She took a blind eye to it, but she knew she was making money, and she knew she was doing expenses, but she did not look at her QuickBooks at all because she was scared of it. And so now I categorize everything. I speak to her on a monthly basis. I set goals, and then we, work it out. And so that kind of helps, each business owner have that nurturing aspect of things. And at one point she was just so overwhelmed, but then at the end of the day, she's like, thank you for taking the time to explain this to me, basically provide that teach, support, and partner with them so that they can grow and that they can understand what their books look like, and as a small business owner. So she feels good about her business and what she can see going forward. And it's all because you find someone who is there to kind of help you through the process of being a small business owner.
Where do you guys see, I guess, your guys' business, because you guys are also running a business, and where do you guys see your business going in the next couple of years?
Well, mine has grown over the past 5 years quite a bit, because the IRS is getting tougher. They're doing way more audits. Every year they do thousands more audits than they did before. So the more letters that go out, the more people realize, I better talk to somebody who knows the rules here. So my business is growing. And I think it's primarily because people are getting confronted by the problems more often, and we get them solved.
Well, I'm new to Arizona, but my business is nationwide. So it's a matter of, I know I can only go up So I'm just trying to network and partner with people and, get out there for small business owners to understand the importance of having an accountant and someone that can, partner with them to ensure that they grow and ensure that they don't get tax letters, So that's the ultimate goal, is that people are scared to get audited, but sometimes people don't understand how important it is to have someone that can just give you peace of mind. So the more I can get that out to people, and alongside, just growing your business as a whole, my goal is to teach people. It's not about, how much dollars or how many clients I have. If you're a business owner and you're struggling with accounting, I want to, be there and partner with you so that you don't have to deal with the stress of what you have a passion for. My passion is accounting. So I just want to do numbers and let you, focus on whatever it was that you started your business out for. So it can be endless for me.
In the beginning, you mentioned that you guys do for cannabis companies.
Yes.
Cannabis related companies.
Yes.
What's different about that industry?
It's heavily regulated. Because it's not federally legal, it's state legal. And so each state has their own compliance issues. And then each state also licensing is different. And so the ultimate goal is that they're going to have taxes, but the structure of your business has to be in compliance with your license and what the state has. And that's totally different from what's going on. Because a lot of times people look at, I'm filing my taxes. The IRS is who they have to answer to. Because it's not federally legal, there's a lot of other things and steps that are in place that we have to be in compliant with. And we can still get hit for, doing something that can be considered trafficking, getting supplies and things like that. So if your accounting is in order, that's kind of where we're at right now. It's not federally legal, but if your accounting is in order and you're able to back it with a clear explanation to the IRS, that's what's needed right now. And so when you're a cannabis specific accountant, that makes the difference, because we're aligning our chart of accounts in respect to the tax codes that are out there. So for dispensaries, it's 280E. If you're a grower or a farmer, then it's 471. So you have to be aligned with those tax codes that are out there. They're very primitive, but they're looking at that from the IRS agents that are coming out, and they're going to attack those people.
So yeah, all businesses need tax professionals, but I guess the cannabis industry needs you guys a little bit more because of the consequences of not properly doing things, is the IRS knocking on your door to, doing really illegal things, I guess.
Yes. Yeah. And I mean, there's one form that we just had some training on. It's like the 8300. The IRS created it, but it's called the Federal Crimes Unit. They are the ones who answer to this form, but the IRS created the form. And so it's anything over $10,000 that you're giving to a person. It's a flag for the IRS. But when you're doing cannabis, then it's under a different umbrella. And so we have, make sure we fill out everything on that. And we have to have this information. But when you're just a regular business owner and you're just doing a transaction that's over 10,000, if you miss a few spots here and there, that's one thing. But then when you're over here on the Federal Crimes Unit, that's a whole new different ball of wax and a different umbrella. But people go and they talk to the IRS because this form was created by the IRS. And then when you realize, the IRS is like, yeah, we don't handle that because that's cannabis. Those are the reasons why you need someone that's cannabis specific.
Is there anything that I haven't asked about that you guys want to talk about? Anything related to taxes or anything that's not related to taxes?
I think a lot of people in business are a little confused about travel expense, because you have vehicle expenses and business. But if you're in your own tax home, which would be like if you're running your business in Phoenix, your tax home is the Phoenix Valley. Okay, you're not traveling if you go from your office to Tempe. Okay, traveling is when you have to be gone for a period of time to where you have to rest. Okay, then you're traveling. So if you were to go from Phoenix, say to Flagstaff, then you could justify and say, hey, it's traveling, which is entirely different than driving for business. And there's a lot of different regulations. And bookkeeping is critical when it comes to traveling because you've got to document that it is business. Mm-hmm. You've got to document your lodging, your transportation, your meals. Basically, you need to make sure that you can clearly document the dates that you were traveling. From the time you start, reach your destination, and get back, you want to clearly document those dates. And it's like so many other things. They understand they can deduct it, but they don't follow through and document their expenses. So you actually, if you don't have the documentation, it doesn't matter what, it gets thrown out.
So what does a documentation look like?
First thing you got to do is document the purpose of it, business purpose. In other words, who are you going to see or what are you going there business related? You got to clearly document and show that. And then when it comes to transportation, whatever expense you have, if you're driving, of course, that's mileage. If you're going by air, that's airfare. Now, lodging and meals. The IRS has what's called per diem. They have per diem for every area in the country, believe it or not. Every square foot of this country has a per diem attached to it. Per diem is in two parts. One is lodging. It tells you this is the average for that area. This is what you get per day for each documented business day for lodging. And then you have the second part, which is meals and anything extra, over and above that, such as tips and that type of thing. That also has a fixed amount. So when you document your days that you are there, your business days, then it's pretty easy to figure your lodging deduction and your meal deduction. But again, if you did not clearly document the business purpose and clearly document the days that you were there doing business, then you can't deduct the other things. Now, you can have a business trip and a vacation trip, but you clearly have to document what days you were doing business. Mm-hmm. And you can't deduct anything for the other days. And a lot of businesses, are traveling. That's just the way our economy is. And a lot of business people just don't understand the necessity of clearly documenting these things.
Yeah, I agree. Even for me, sometimes it gets a little bit, because it's the last thing you think about.
Yep. But that's what it segues into the accounting aspect. If you have a bookkeeper or an accountant that's doing everything, then you, as the business owner, would not have to burden the shoulder of understanding and document, because you'll have that accountant person to say, hey, you went out of town here. It was for business. They are going to make sure that they capture everything. Mm-hmm. But if you're doing it yourself, mm-hmm. that's where we run into the problem, is that when the business owner is trying to do everything themselves, they forget stuff. And so the bigger aspect that I would say that I would want people to know is social media is going to give you maybe 80%, and I might be stretching it, but social media is going to give you 80% of what you can do. But the other 20% is wrong. It may not be applicable for your business. But so many people get tied up in the thought process of, oh, I heard I can hire my kids, or oh, I think I can change my LLC to a S corp, and then just all these different things that they see on social media, they think it applies to them, and so they try to do that. I had a client right now. She has her own bookkeeper. She said she didn't want me to do any bookkeeping for her, just her taxes. Well, then now I'm looking at her stuff, and she has an office rental. And I'm like, why do you have this office rental? Is this a different address for your business? Well, she says, well, my bookkeeper told me that I can purchase my home, I can buy my home out. And she thought she was an S corp. So she's like, she's an LLC, and she's like, oh, this is in place of the the home expenses. This, I rented my house out to my business. I said, you can't do that for a single member LLC. That's one thing. But she's like, oh, this bookkeeper is licensed. I said, but this bookkeeper doesn't do taxes. So they're telling you the wrong information. And so she's like, I said, you need to give me new financials because I can't plug that number in because your profit and loss sheet, which is the 2553 form, it has to match what the profit and loss states. And if you have $10,000 and you say it's a home office rental, and it's nothing, this is just a number you guys plugged in, that's not going to be right. And so they all got that information off of the social media that says you can rent out your home for 14 days to your business. But they did not know the extra steps that are caught up into it, and they just go off of that. I had another gentleman, he says, I heard some rappers tell me that I should change my LLC to an S corp so I can get better taxes. And I'm like, have you made any money? This gentleman hasn't made any money for his business, but he's trying to change his business structure, entity structure. I said, that's just a tax structure setup. You have to make some money first before you try to sit up here and figure out what's the best tax break that you can do. But people are, in the day of age of social media, that's kind of what we have to deal with. And we tell people, hire an accountant. If you're not going to hire an accountant, then get with a tax accountant that's going to help you, kind of tell you what's going on. Maybe they will, maybe they won't, but you definitely need an accounting professional part of your team while you're running a business. It's very vital.
Well, when you're hiring somebody, you need to look at their credentials. Okay, they say they do taxes. Does that mean they went out and bought a box that said tax software out of Walmart and now they're a tax professional?
Yes,
no.
They need their EIN number.
But you've got to look at their credentials.
Yeah.
How are they certified? What continuing education are they maintaining? Just because he was trained 10 years ago and was a great tax preparer 10 years ago doesn't mean he knows any of the tax regulations now, because they've all changed. So don't be afraid to ask. What is your credentials? Why are you qualified? Tell me about what you've done. It's like if you've got a car, so you're driving down the road and something's wrong with your car. You see some guy in his driveway with the hood up and he's fixing it. You don't pull in there and say, hey, will you fix my car? No, you look for somebody who has a shop and has credentials and they are a mechanic.
Yeah. That's true.
Now, if you do just drive in that driveway, then, you're probably not going to drive out. He's probably going to screw it up for you. And that's the same way with your taxes.
Yeah.
You give him everything, he screws it up. Guess what? You signed it.
Yep.
He didn't sign it, and the letter comes to you,
Mm-hmm.
not the person that you paid to do the taxes. So check the credentials.
Yeah.
Make sure they are what they say they are.
Yeah. And and I tell people that too, because a lot of times people go to Walmart or they go to H&R Block and then they're frustrated because they get a letter in the mail and they're like, H&R Block did it. And it's like, but you still didn't get an understanding about your business. And he has more, credentials than me because he has an EA, but I still have IRS credentials too. And we're on the IRS website and we have our numbers and stuff like that. But once again, you want to go to someone that's not a fly-by-night tax preparer also, because they do pop-up shops and these pop-up shops are here today and gone tomorrow. You want someone that's been around for a while to know that they're not going to just do anything to your taxes, and then next year you don't know what they did and you can't contact them. So you definitely want someone that is reputable and that can actually, provide you with the understanding of what did they do. You just didn't give them paperwork and then you got a refund or you owe and you just walked away. You didn't get your answers, answered or anything. And so that's where people are feeling that they can't ask questions, and they can ask questions. They should ask questions.
Yes.
Great. So if, and people that are in need of your guys' service, where can people find you?
I'm on all social media platforms. And we have a website, and it's acaccountingteam.com. And then Facebook, AC Accounting Team. For the cannabis side of things, my Instagram is JAC Accounting. But other than that, those are where we're at on social medias.
Sweet.
I don't do a lot of social media. I do a lot of word of mouth. And that's really, but if anybody has a question, they just can send an email to jtinneytaxes@gmail.com, and I will be glad to answer their questions.
Beautiful. They should mention that they saw the podcast if that's the case.
Yeah.
That would be amazing. Jim would. Yes. Yeah, I know you guys are going to definitely help them out. So thank you guys for being on the podcast, and it was an amazing time.
Thank you.
Thank you very much.
Thank you for having us.